What is up, Broke Man Nation? My name is Adam and this is Broke Man Finance. In this video, we are going to talk about Forest Road acquisition. Ticker symbol FRX. I don't know if there is another SPAC or stock out right now that is getting more attention and talked about more every time, any forum I go on. Anytime somebody mentions, hey, what's a new stock to watch, a new stock this, new stock that, FRX, FRX, FRX. That's all I have been hearing about over the past few days. My God, everybody is talking about it. They believe it has Churchill Capital run-up potential. If you don't know what that means, then go check out Churchill Capital, ticker symbol CCIV. They have had a huge run over the past probably, 6 weeks. And people are believing that FRX has that same potential and they are pouring money into it. If you're unfamiliar with FRX, it's all good, as was I until here recently. I'm going to explain who they are, why they're getting so much hype right now, and the long-term potential. Are they worth it or are they not? FRX has been taking off lately after announcing a three-way SPAC merger with Beachbody and Myx Fitness. The SPAC merger between the three companies will have the combined entity operating as the Beachbody Company. This will have it serving as the parent company of Beachbody On Demand, Openfit, and Myx. Once the merger is completed, it will operate under the ticker symbol BODY or BODY. In just a minute, I'm going to explain this whole home fitness momentum that's occurring right now and just this whole explosion of fitness in just the industry itself, and why I think for sure we're going to see an uptick in that share price, if that gives you any kind of hint on my bullishness or optimism regarding FRX. But first, I want to introduce you to this all-star management team that is getting people just as excited about who's bringing this thing to market as opposed to what's getting merged. The SPAC members include three former executives from Disney. Kevin Mayer, I hope it's not Meyer, was the former executive vice president of the internet group, which included ESPN.com. Kevin has also helped lead the direct-to-consumer strategy that launched Disney+. Salil Mehta worked at Disney from 1994 to 2008. Serving as the former executive vice president for the ESPN Enterprises division. Thomas Staggs is the former CFO of Disney from 1998 to 2010. While serving as CFO, Staggs led Disney through acquisitions of Capital Cities / ABC, Pixar, and Marvel Entertainment. Staggs served as the chairman of Walt Disney Parks and Resorts and was a key to the company opening a theme park in Shanghai, China. And to top it off, as if that wasn't a pretty squared away team, and they have more, Shaquille the Diesel O'Neal is a strategic advisor along with Martin Luther King III. That is a pretty legitimate and experienced leadership lineup. FRX is currently trading for $15.75 at the time of this filming, and I really don't expect it to stay there long. And it jumped up a chunk this past week because of an announcement of a second SPAC being led by these Disney execs, or, well, should I say former. They plan on rivaling Peloton International, ticker symbol PTON, whose share price saw a significant increase during the Roni because of the at-home workouts becoming more commonplace because gyms were closed. Right now, that share price is trading for $139.45. If anybody can take on Peloton, it is Beachbody and Myx. There are a lot of expectations right now that FRX's share price is going to run up very quickly and aggressively. Now, I don't know if they will get to where Peloton is now, but there are a lot of people that are believing that they're going to be a more valuable company than what Peloton is, and that share price will eventually be higher than Peloton's. So there's a good chance you're looking at a really cheap stock right now that's getting ready to push up hard. The SPAC's merger with Beachbody and Myx Fitness will value the combined company at almost $3 billion. It comes as the popularity of at-home fitness applications has grown during the pandemic. With brands such as P90X, Insanity, and 21 Day Fix, Beachbody has consistently expanded its market share over the past 2 decades through its proven model of integrating the most comprehensive library of premium fitness content with easy-to-follow nutrition guidance and supplements. That's what Forrest Rhodes said in a statement. You combine the customer subscription base that Beachbody already has with the bikes of MYX and their own subscription service, and you have a pretty legitimate powerhouse in the fitness world. MYX's bike comes at a lower cost at $12.99 per bike and a $29 per month subscription than Peloton. Peloton offers its cheapest bike package at $1,895 with a $39 per month subscription that provides more than real-time bike stats and 3 classes. If anyone is going to undercut Peloton, Beachbody may have the platform to do it, especially with that customer base. It expects connected fitness revenue to be $97 million in 2021 and grow to $581 million by 2025. The fitness industry as a whole is growing very quickly. Look at these home fitness numbers. The global home fitness app market is expected to reach a US $26 billion by 2030. Currently, it's around $4 billion, expanding at a CAGR of 21% from 2020 to 2030. And if you don't think a powerhouse like Beachbody and MYX, if you don't think they're going to get a big chunk, I believe, if you don't think they can get a big chunk of that 26 billion, you're crazy. I do believe that as we get back to normal and people get the vaccines and everything starts maybe calming down a little bit, people are going to want to go back. A lot of people like going to the gym. They like to physically go to the gym. So I don't expect Peloton or even MYX's equipment sales to stay at the same level they currently are, unless we have a rehash of some new strands of whatever, but I'm not even wanting to go down that road. That just drives us all inside. Then yeah, I would say their sales will continue to tick up, but eventually people are going to want to go back to the gym. So I could see the share price falling down some. Do I see it just falling down 60, 70%? No, not at all. Could I see it dropping 20%, 30%? Yes, I definitely could. But at the same time, do I believe that FRX or body here soon enough is going to stay at $15 levels? Not a chance. This is a stock, I believe, right now, I can honestly say could double, triple, potentially quadruple your money if you're getting in now. Some people are already seeing those profits moving up. And let's say they were to get to those Peloton numbers, now you're looking at almost 10 times in your money, legitimately. I know YouTubers get on here and say that all the time, but this could be a legitimate 10 times your money play right now, especially if you get in early enough, because I'm telling you, the hype and the optimism that's coming out again on FRX online, all the chatter that's going on about it, it is going to push up, and I think it's going to push up really quick. I don't know. People are saying it's going to push up as quick as Churchill Capital. I mean, anything's possible at this point, and if it does, hey, go for us, because I plan on buying first thing Monday morning. I want to get into this as early as I can because I believe this is going to make us investors some money. I feel good about this stock. So I would 100% rate this thing a buy. But let me know what you think in the comment section below. I would love to hear your thoughts. As always, I hope those stocks stay green. I hope you stay safe, and I hope everyone out there takes care.